We all know that getting a major health diagnosis is, well, it's a life-changing moment, right? It's scary, emotionally draining, but there's a second hit that we don't talk about enough, the financial shock that comes right along with it. So today, we're going to break down that hidden cost and look at a tool that's designed to be a crucial financial safety net. Just let that sink in for a second. Imagine you get this difficult, heavy news, but what if, along with all that, you also got a check for, say, $20,000? Cold, hard cash, no strings attached, to help you deal with whatever comes next. It sounds a little wild, right? And that's because it points to this massive gap in how most of us plan for our health. And this is why that gap is so dangerous. Get this. A staggering 2/3 of all personal bankruptcies here in the US are tied to medical problems. We're not just talking about a few late bills. We're talking about complete financial devastation, and it's happening to people who thought they had good insurance and were totally covered. So let's dig into our first big idea here, the unseen financial shock. Because this is the part that catches everyone by surprise. We all think, I have health insurance, I'm good. But the reality is, it's just not that simple. Your insurance is not the whole story. And what's really staggering is how common these things are. I mean, look at these numbers. 1 out of every 2 men will get a cancer diagnosis. 1 in 3 women. And heart attacks are still the #1 killer. These aren't rare events. This really drives home that for so many of us, it's not really a question of if something like this happens, but when. And here is the absolute crux of the issue. Your health insurance, it's designed to handle the tip of the iceberg. You know, the doctor's fees, the hospital stay. But the real danger, the thing that sinks the ship, is the massive invisible part of the iceberg below the water. It's all the other costs that nobody ever warns you about. Which brings us right to our next section. What's happening beyond the medical bills? We're talking about all the indirect costs that can absolutely drain your savings and completely derail your financial life, even if you have a fantastic health plan. And this chart just says it all. On average, a massive 42% of the money you'll spend out of pocket during a major health crisis has nothing to do with the actual medical treatment. Nearly half. So you have to ask, what in the world makes up that huge chunk of change? Well, let's break it down. We're talking about real-life stuff. You or your spouse might have to stop working, so there goes your income. You might need to travel to see a specialist in another city. You might need to put a ramp in at home after a stroke, or pay for special organic diets, or even just board the dog while you're in the hospital for weeks. Each one seems small, but when you add them all up, it's financially devastating. Okay, so we've laid out the problem, and it's a big one. But now let's pivot and talk about the solution. There's a financial tool designed specifically to fill that 42% gap. It's called a critical illness policy. So what is it? It's actually pretty simple. It's an insurance plan that pays you one big tax-free check, a lump sum of cash, if you get diagnosed with something serious that's covered by the policy, like a heart attack, stroke, or cancer. And here's the best part. That money is yours. You can use it for anything you want, no questions asked. And that freedom is what makes it so incredibly powerful. There's this great story about a client who got diagnosed with stage 4 cancer. And when he got his lump sum check, you know what he did? He took his family to Disney World. That just shows you this isn't just about paying bills. It's about giving you peace of mind and the ability to live your life, even in the toughest of times. All right, so you're probably wondering, how does a plan like this actually work? Let's get into the nuts and bolts and look at the key numbers you'll want to know. The whole process is super straightforward. It's really just 3 steps. 1, you pay a small monthly premium while you're healthy. 2, if you get diagnosed with a covered illness, you let them know. And 3, you get your one-time lump sum cash payout. Simple as that. And when I say small premium, I really mean it. For a lot of people, a solid policy costs somewhere between $20 and $30 a month. I mean, that's less than most of us spend on Netflix and coffee, right? And in return for that small monthly cost, the benefit can be huge. Payouts can range anywhere from $10,000 on the low end all the way up to $75,000 or even more. That's a serious chunk of cash. And you can't forget this crucial detail. That payout is 100% tax-free. If your benefit is for $20,000, you get a check for $20,000, period. It's not considered income, which makes every single dollar that much more powerful when you really need it. Now, it's also really important to note that these are usually two separate plans. You've got one for cancer and another for heart attack and stroke. And that separation is actually a good thing. It means that if you have a family history of heart disease, for example, you might not qualify for that policy, but you could still easily get the cancer plan. A lot of people just get both to be fully covered. Okay, this brings us to our final, and honestly, probably the most important section, how you actually qualify for this coverage. Because with this type of insurance, timing is absolutely everything. Here it is, the single most important rule of this whole explainer. You have to apply while you are healthy. Think about it. You can't buy car insurance after you've already crashed your car. It works the exact same way here. This is a tool you use to plan ahead, not something you can get once a crisis has already hit. So, how do they figure out if you're eligible? Well, insurance companies use something called a look-back period. It's just their way of looking at your recent health history. They'll ask really specific questions like, in the last 6 months, have you had a blood pressure reading over 150 over 95? Or in the last 5 years, have you been treated for melanoma? And they'll also ask some other key questions about your health history. You know, things like whether you've ever had a pacemaker, if you're an insulin-dependent diabetic, or, and this is a big one, if you have any outstanding test results from an MRI or a CAT scan that haven't come back yet. It's all part of how they figure out the risk before they offer you a policy. And all of this brings us to one final question. And it's really one for you to think about. You've probably got a 401k for retirement. You've got a savings account for a rainy day. But when you look at that 42%, that giant chunk of hidden costs, is your financial plan truly, honestly prepared for the shock of a health crisis?